Hey everyone, John and here from School of Trade. Today we're going to be taking a look at a wave pattern long here on the E-Mini Dow. So the first target coming off at 854, and the second target just coming off at 17,871. We have a really nice opportunity for a wave pattern here. I'm going to move the stop a little bit given the day type, but overall, if we zoom out a little bit, this is kind of the big picture. We're in a range, right? So what are we looking to do in a range? Well, we're looking to buy low and sell high. Now, everybody always says that. Everybody knows that's what you're supposed to do in a range. It's just finding the pattern to get yourself into the move to buy at the low and sell at the high. Right now, we have a wave pattern going back up to the upside here with a perfect trigger zone test. Absolutely beautiful trigger zone test right on top of support. Really nice rejection candle. Now we're just looking to ride this back up to the highs. Now, why do we have the stop a little bit wider? It's a range day. Range days typically end up being a little bit choppy, a little bit sloppy, so giving it as much room as possible just kind of makes sense until after we get that first little target area. Now, that target area above here, we're looking from our entry at 841 up to 54, that's 13 ticks. Looking for the next target above that at 871, that's going to be 30 ticks. So overall, we're taking 4 off at 13 and 4 off at 30. And predominantly, I mean, you could look for a little bit of a larger target looking back up to the high of day. That is definitely a likely move that can occur, but there's just so many things that are in the way. Instead of getting greedy looking for a massive move up to the highs, maybe trail one contract. I find that I'm typically a little more conservative, so I'm happy with a 30-tick runner on the Dow on a range day. I'm going to be pretty happy about that. So we're looking to the upside. So far, so good. Now we just need a little bit of follow through from the buyers. And once we can get that push up into that first target at 854, we can lock the stop in nice and tight so that we don't allow any more movement really against us at all. Because of the type of day, we do want to be initially conservative when it comes to this stop. But once we have that conservativeness out of the way and we've gotten that first target taken care of, then you want to lock it up because you don't want this thing coming back down on you. It is very common in range days to see it fluctuate back and forth. So it wouldn't be a huge surprise to see it hit the first target and come back and stop you right out at break even, and possibly even go a little bit farther, just kind of like they did back here. They had a nice push down, they bounce up, and then they push down one more time, and then they bounce back up again. That could happen here. So we want to lock out all the risk after we get that first target filled. We're only 1 tick away now. There we go. So now that we've got that filled, our stop can go to break even. And the nice thing about that stop placement now is we have kind of the benefit of the doubt where we have the cloud right here in the way. Now that is going to act as support, but you can be a little bit more conservative. Use this profit to your advantage and say, well, I can just leave my stop down here at the swing. Right? There's a good likelihood that we get chopped up around here. They come back, they swing you out, and then they push back up to the high. So there's 2 different ways to go about this type of setup. So when you're talking about different stop placement, it really kind of comes down to personal choice. I find that I'm a little bit more conservative, so I like my stop down here at 832. I could also easily see an argument for being a little more aggressive and locking your stop up at 42 as well. You have both camps that are an option. So what I'm going to do instead, I'm going to meet it in the middle. I know that there's a line of support coming right through here, and I really don't want to see that support broken, so I'm going to go underneath that area right there. So the stop will be at 835 until we get a little bit more further confirmation. So the nice thing about that is from our entry point to the stop, we're looking at a 6-tick stop. So if we do get stopped out, we already made 13 on 4 on that first press, and we would give back about half of the profit or so. But this gives it as much room as possible without giving everything back so that we know that we have as much as we can to get that next move up to 871. So we'll be back in a little bit, see if we can get that continued press up through the swing at 860, and then a further move into our target at 871. All right, so we're seeing some nice bullish pressure back on the table again. Our stop holds us in at 17,835, and you can tell that they just tried grinding. They finally got those +1 break-even stops, and it shot right back out of there. So because of that reaction there, I'm going to move my stop to break even. If it comes back now, I'm not interested in giving anything else back. This was the room that we wanted to give it, and because we did that, that allows us to catch this next move up, and we're only a couple ticks away from our target. But if it can't complete the objective now, I don't want it. So we've got a beautiful move up. we got our wave pattern, we got our target filled, 4 off at 13, 4 off at 30 with kind of an interesting little bit of price action there. Came back and stopped all the +1 guys out and then rocketed higher. And that's kind of the concern on those range days. That's why we left our stop underneath an area of support. If it's going to come back, the support at least has a chance to hold us in. If it doesn't, we only give back half of the trade and we still make a profit on it. So beautiful move to the upside. Gorgeous wave pattern. Overall, 172 ticks on the trade. That's $860 at $5 a tick. So if you have any questions about it, feel free to shoot an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.